Welcome to Spiedel's Federal Tax Minute. I'm your host, Catherine Zidane. This week, we're talking about the credit for electric and hybrid vehicles and some clarifications to be aware of. We'll be covering this topic in greater detail at Spiedel's Federal Tax Update webinar on January 9th and 10th. You can see a full list of topics and get registered at spiedel.com. In newly updated FAQs contained in IRS Fact Sheet 2024-26, the IRS clarifies various provisions of the IRC Section 30 Cap D New Clean Vehicle Credit. In general, taxpayers can claim up to $7,500 in credit for qualified vehicles if their AGI is below certain levels. Dealers will provide the taxpayer with a seller's report at the time of the purchase, verifying that the vehicle qualifies for the credit. The credit is not refundable and it cannot be carried forward. Beginning with the 2024 tax year, taxpayers can transfer the maximum amount of the credit to the dealer, even if they would not be able to claim the full credit on their tax return. Here are the issues addressed by the FAQs. Even though a vehicle make and model may be listed as qualifying for the credit, a particular vehicle with that make and model may not qualify if its final assembly is not in North America. That's why it's important to check the seller's report provided by the dealer to make sure that the dealer confirmed that the particular vehicle qualifies for the credit by running the vehicle identification number through the IRS and Department of Energy database. Taxpayers' AGI has to be below specified AGI limits to qualify for the credit. A taxpayer can claim the credit based on their AGI for either the current year or the prior year, so if their AGI is too high during the current year, they can still claim the credit if their AGI was below the threshold in the prior year. When a taxpayer's filing status changes during the 2-year testing period, the taxpayer will apply the AGI limitation based on their filing status for each of those years. This means a taxpayer who marries in 2024 and files a married filing joint return for 2024 has to use the single or head of household filing status threshold for 2023 to determine if they're eligible using the prior year's AGI, not the married filing joint threshold. The credit can be claimed by pass-through entities and passed through to their owners, but keep in mind that only shareholders or partners or members whose income is below the AGI thresholds are eligible to claim the credit on their returns. The AGI limits do not apply to the IRC Section 45 Cap W Commercial Clean Vehicle Credit, so pass-through entities with owners whose AGI limits exceed the thresholds should claim that credit instead. Only the person listed as the registered owner of the vehicle can claim the credit. So if a parent buys the car for their child and the child is listed on the dealer's seller's report as the buyer, the parent cannot claim the credit on their return. Regarding credit transfers, only individual buyers can transfer the credit to the dealer. An individual does not include a grantor trust if the grantor trust is listed as the buyer on the seller's report, or a disregarded entity such as a single-member LLC, where the individual's name and taxpayer identification number is listed as the taxable owner of the disregarded entity. While leasing businesses can claim the new clean vehicle credit, only lessors and not lessees can claim the credit. Leasing businesses cannot transfer the credit to the dealer because the election to transfer credits is not available for new clean vehicles purchased for business use. The taxpayer and not the dealer will have to pay back the credit to the IRS at the time they file their return if they do not qualify for the credit because they exceeded the AGI limits. We cover this topic in the September issue